You want to know which order blocks are the highest probability and which order blocks will actually hold. So which order blocks do you want to be trading off of? Well, that is something I can help you with because I have this fancy enigma and I know the secrets of the market. No, I'm joking. I have a very logical, simple, step-by-step approach, mechanical as well, to get you to use the highest probability order block. Don't worry, I won't talk in riddles. Don't worry, I won't leave you with any mysteries or any confusion. I will give you the exact guidelines on how to know which order blocks are the strongest. In order for me to go over the highest probability order block, we need to have a few guidelines first. High probability order blocks are coming off a previous PD array. That is the first sign that it is a high probability order block. Then the next sign is that price is leaving behind a fair value gap off of that order block. And then the last step that we need to go over is that price has no reason to come back below or above that order block. So, in other words, every time frame needs to be in context of the time frame above it. And I will show you exactly what I mean with these 3 steps. So if every time frame needs to be in context of the time frame above it, where do we actually start? We start on the monthly time frame. Why do we start on the monthly time frame? Because the monthly time frame has the strongest magnets. Whatever the monthly time frame wants to do, price will move there. Whenever price was moving towards this fair value gap right there and that order block right there, it will disrespect every single order block that is on the weekly, daily, 4 hour, 1 hour, 50 minutes, 5 minutes, of course the 1 minute. So if you don't have a clue what the monthly is doing, where it's expanding towards, what is the plan of the monthly, then you are going to get blindsided. And that is with a lot of time frames right there. So in order for us to know if the 1 minute order block is extremely high probability, we need to know what the monthly is doing. As crazy as it sounds, that is what we absolutely need to know. That is why the monthly and the time frames above you are so extremely crucial. So what are we seeing on the monthly? We have this down candle right there. This down candle right there is responsible for leaving behind this fair value gap. And it is also coming off of what? Off of this swing low. What is a swing low? That is a discount array. So the first 2 steps are checked off. Is this order block in context of the time frame above it? Well, I only go to the monthly. I don't go above that. That is too much. So is it in context? Yes. So that is a high probability order block. And you can see, again, just a little tip. I am ignoring everything that is to the left. I only focus on the right here. Coming off that discount array, leaving behind the fair value gap, right there we retrace into it. That is perfect. That is what we need to know. If we now drop down into the weekly time frame, so the monthly is checked off, we drop down into the weekly time frame. Here we are seeing that monthly swing low right there. This was the monthly order block right there, and here was the monthly fair value gap as well right there. Now what are we seeing here on the weekly time frame? We are seeing this order block right there, which leaves behind a nice fair value gap. Is it coming off of a clear discount array? Not really. But what is the main reason why price is not holding right there? Why is that order block not holding? Because it is not in context of the time frame above it. Why not? Well, on a monthly basis, we had a reason to come back below this weekly order block. So for a monthly basis, there was a reason to come to this line right there. So that weekly order block is not strong. It is not high probability. Because on the time frame above it, there's a reason to come below that bullish order block. And that is what we want to avoid at all costs. So you can probably see what I'm trying to tell you here. That if every time frame is in context of the other, and price has no reason to come back below a bullish order block, and we can know that by having the time frame in context of the time frame above it, then that is your high probability order block. The strongest order blocks you can find. So even though this is a weekly order block, most people would say, weekly order block, strong order block. No, it's not a strong order block. And then afterwards, what are we seeing? We are creating a new order block right here. That is created off of what? That is created off of this monthly order block. So this order block, these 2 down candles right there, are leaving behind a fair value gap as well. That is an extremely high probability order block. Why? Because on a monthly basis, let's go over it. On a monthly basis, is there a reason to come back below this low right there, the low of the order block? No. Why not? Because the monthly already came into a monthly order block as well right there. So there's no reason to come back below that based on fair value gaps and order blocks right there. So then this weekly order block that is sitting right there, this weekly order block with the fair value gap that is sitting right there, that is extremely high probability price action. So now the weekly is checked off. So if we now drop down into the daily time frame, here we are on the daily time frame, and here we saw that monthly order block again. All these down candles, that is our weekly order block. This was the low of the weekly order block right there. This was the weekly fair value gap that was sitting right there. Then what do we see afterwards? We see another order block being created right there. This daily order block is coming off of what? It's coming off of previous PD array in the form of that discount array, the weekly fair value gap right there, and the weekly order block. And it creates a fair value gap, so it leaves behind a fair value gap. Perfect. That is extremely high probability, but it doesn't hold. Why does this get swept? There's one instance, or actually 3 instances, where a high probability order block or even high probability price action might not hold. And that is when we have NFP, FOMC, or CPI. That is when high probability order blocks like this can get swept. So that is also why you of course want to avoid that price action right there. Only trade afterwards. Because what do we see afterwards? If we follow along with price right here, then here we create a new order block coming off of, again, the same discount array that we had right there. The weekly order block, the weekly fair value gap sitting right there. Then we have this daily order block being created right there, leaving behind a fair value gap, even 2 fair value gaps. Perfect. That is your extremely high probability, your strongest order block. Why? There's no reason for price to come back below this low right there based on a weekly basis, because the weekly basis is still expanding right there. It's coming off of that weekly order block, coming off that weekly fair value gap. It is still expanding right there. There's no fair value gap below that it needs to mitigate, that it needs to trade into. There's no reason for price on a weekly basis to come back below that low. Then on a monthly basis, was there a reason to come back below that as well? No, because on a monthly basis, there was no reason for price to come back below that low. So now we have what? We have a monthly order block, a weekly order block, a daily order block, and they are all in context of one another. So the daily is in context of the weekly is in context of the monthly. So on all these time frames, there's no reason for price to return back below that order block. That is what we need to have. Now, of course, on a daily basis right here, you could say below this daily order block, there's a fair value gap here, there's another order block here. Yes, but it's only about the recent order block. That is all you're looking at. You're only looking at this recent. What is that? What did we go over in the market structure video in the A to Z guide? That is your range. Your range that needs to have a fair value gap. That is the range you want to be trading off of. Not a random range right here. This is not relevant. Only this is relevant. The only recent price action right there. That is relevant. So that is an extremely strong, high probability order block because it is in context of the time frames above it. It's in narrative. Now, if we drop down into the 4-hour time frame. On the 4-hour time frame right here, we just saw this daily low right there. This daily order block, that is the low of the order block. That should not get violated on a daily basis right there. This is the order block on the daily basis as well. Then what do we see afterwards when we come into that daily order block? So again, that is important, right? We need to come into that order block on the time frame above it first, and then we can go into the time frame below it to look for another order block. And that is the sauce. That is the secret. So right here, we are coming off that daily order block. When we zoom in, we see this order block. What is it coming off of? It's coming off of, well, first off, we of course have this daily order block that we are coming off of. But even more specific, this is coming off of that fair value gap right there. And it's leaving behind that fair value gap. So it's coming off a discount array. Step 1, done. It's leaving behind a fair value gap. Perfect. Step 2, done. Then right there, that is your highest probability order block. Why? There's no reason for price to return back below this low. Why not? Because we are already coming off that daily order block. So on the time frame above it, there's no reason for price to come back below that low. There's no fair value gap below that low. There's no order block below that low that we haven't traded into just yet. That is extremely high probability because again, we are not giving price any reason to come back below that low based on the time frame above it. That is important. So only on the time frame above it, you would look at that. So if this order block, this 4-hour order block had a daily fair value gap below that in this area right there, then it would be low probability. If there was a daily fair value gap in this area right here, below that 4-hour order block, then it would be low probability. But there isn't one. We already came off of that order block and off those fair value gaps right there. So this is extremely high probability. Now, if we drop down into the 1 hour, we can go even crazier. And I want you to pay attention to this. Here we are on the 1 hour time frame looking at the price action. So right here, we came off of that daily order block. That is this line right there. These lines is the 4-hour order block right there. Now let's follow along with the actual order blocks right here. What is happening? We are coming off of this fair value gap right there. We are expanding higher. Not a lot of fair value gaps to work with. Perfectly fine. What do we see afterwards? We are sweeping this low. So we are coming off of a PD ray. All right, can we create a fair value gap right there? Yes. So what is this? This is an order block. PD ray, step 1 done. Second step, fair value gap, done. Third step, is there a reason for price to come back below that order block? So below this low right there? No. Why not? Because it's in context of the time frame above it. It's in context of that 4-hour time frame. Because on the 4-hour, there is no fair value gap in this area. Right there. There's no fair value gap. There's no reason for price to come back below that low. Because everything already there has been traded into, or there's nothing to trade into. So we are not giving price a reason to come back below that low. So then, right there, that is a high probability order block. Now we are getting into the sauce. Because now let's drop down into the 15-minute time frame. All right, the 1-hour order block that we are seeing here. So this is the high of the order block. That is the actual order block right there. Then we are having this line that is the low of the order block, and this was our PD rate that we are coming off of. Let's delete the PD rate. Let's just keep these lines so we have an idea of where the order block is on the 1-hour time frame. Then what is the first thing that we actually can see? The first thing we actually can see is that we are having another order block inside a 1-hour order block, which is this one. Is that a high probability order block on the 15-minute right there? Should we come back below that low? No. Why not? Because below that low on a 1-hour basis, there was no reason for price to return. So that 15-minute coming off of this PD ray, leaving behind that fair value gap, and it's in context of the time frames above it. Perfect. That is an extremely high probability order block right there. Afterwards, what are we seeing? If we delete that 15-minute order block right there, we see this order block. And I'm going to move this 1-hour order block line a little bit to the left right there. We are coming off of this order block right there. This order block, that 15-minute down candle right there. Is it coming off of a previous PD ray? Yes, fair value gap right there. Is it leaving behind a fair value gap? Yes, right there. Is it in context of the time frame above it? Ask yourself that. I would love for you to answer that right now. Because I could understand it if you say yes, because obviously you don't have the full chart right now in front of you. I could understand it if you say yes, because your thought process is, yes, we are coming off of that 1-hour order block right there, right? So it is in context. Now we need to understand at what time this order block was created and at what time we had a 1-hour fair value gap being created. So let's jump back up to the 1-hour time frame first. So now we have this 1-hour fair value gap being created at what time? At 2 a.m. 2 a.m. creates that 1-hour fair value gap. What does price want to do when we create a fair value gap? It wants to trade back into it, potentially with an overlapping order block right there. So let's mark out the 1-hour fair value gap right there. And let's now drop back down into the 15-minute. So the first time when price came into that fair value gap that is sitting right there with the high of the overlapping order block right there, the first time it was high probability. But this order block that was created off of that, and we mark out the low of that order block, of that 15-minute order block right there, is that high probability? No, why not? because we hadn't created a 1 hour fair value gap just yet. But at this candle close right there, now we have created what? We have created a 1 hour fair value gap, which is this fair value gap right there. So is there a reason for price to come back below this low right here? Yes, there is. Is this a high probability order block? No, it's not. So do we want to trade off of that? No, we don't. We want to wait for the 15 minute to be in context again of that 1 hour. And then as well, just to avoid confusion, this right here is not an order block you want to trade off of. Why not? Because this is not part of your recent ranges. You always want to focus on the recent ranges. And on the 1 hour, you just take that 1 hour order block that you want to trade off of, which is this right there. And this 1 hour order block wasn't a 1 hour order block just yet, according to our steps when we came into it that first time right there. So that is important to understand. So it was only a 1 hour order block when we came into it right there on that down candle. And then you just want to use the 1 hour order block and not a random order block that is to the left right there based on the 15-minute time frame. You guessed it, we can go even crazier. So at this moment in time, we also had this fair value gap that is sitting right there, that 15-minute fair value gap with the overlapping order block right there. Let's delete all these lines. We had this 15-minute fair value gap with that 15-minute order block. That was high probability until we closed with the 2 a.m. candle right there. Then it all became low probability because then we had that 1 hour fair value gap right there. So there was a reason for price to return back below that order block. If we now drop down into the 5-minute. So here we have this 15-minute order block that we talked about. We have this 15-minute fair value gap that we talked about as well. And we have this 15-minute order block that was a weak order block right there that we also talked about. So I want you to pay attention to this price action right here. Is this a high probability order block? One could argue we are coming off a previous PD array. We are leaving behind a fair value gap. That should hold, right? No. Why not? It isn't in context of that 1 hour order block that was below it right there. So then it becomes what? It's low probability. And what can you see? You can see that afterwards we do have high probability order blocks because we came into that 1 hour order block right there. That is extremely important to understand. But inside this price action, when we are coming off of this 15-minute order block right there with that 15-minute fair value gap that is sitting right there, let's dive into the 1 minute time frame. Into the 1 minute time frame on Forex? Are you crazy? Yes, because it's doable. You just need to know what you're doing. So let's dive into the 1 minute time frame right there. So here we are coming into that 15-minute order block right there. We have this 15-minute fair value gap that we talked about. This is the high of that newly created 15-minute order block that was weak. We'll leave it on there for now, but again, keep in mind that is the weak order block that we talked about. After we come into that 15-minute order block right there, and we come into that 15-minute fair value gap. Once we have this move higher coming off that discount array, we have this move higher right there. And we have another moving higher. So this is a breaker right there. Is that an extremely high probability breaker? Yes, it is. Because is there a reason for price to come back below this low? No. Because the 1 minute is already in context of the 15-minute right there. So the time frames are in context of one another. That is what we need to have. Again, you can probably notice, why am I skipping the 5-minute right there? If the 1 minute is already in context of the 15-minute right there. And the 15-minute is the stronger time frame. So 15-minute is stronger than the 5-minute. Then the 5-minute is not really relevant right there. Because the 15-minute is already in context. So the 1 minute is already in context of the 15-minute. So we can skip the 5-minute because the 5-minute is not stronger than the 15-minute. So even though there's a 5-minute fair value gap below this price action right here, so in here, then that's not relevant because the 15-minute is the stronger one. If there was a 1 hour fair value gap in this price action right here, then it would have been a different story, but there isn't. So that is a crazy brain cracker. Listen to it a few times and it will make sense, don't worry. So now we can see again, PD array, fair value gap left behind are highest probability 1 minute order block there ever will be. Now, of course, this is not a rare occurrence. This is not something that happens once every blood moon. No, This happens pretty often. You just need to know where you are looking for it. And this is how you can look for it. So afterwards, what do we see? Well, we have this order block. That is our extremely high probability order block. Why is that? Is there a reason for price to return below that low right there? So is there a 5-minute fair value gap right now in this piece of price action right there? Let's actually take a look. This was the 1-minute low right there, the 1-minute low of the order block. So is there a 5-minute fair value gap below that? No. Yes, here, but again, this one is not relevant because we're already coming into that 15-minute context right there. So this fair value gap is not relevant. We're just looking at this price action right there. So no, there's no 5-minute fair value gap. So there's no reason for price to return back below that order block. Afterwards, when we come into that 1-minute order block right there, we create new 1-minute order blocks. These 1-minute order blocks are extremely high probability. So this one right there, that order block right there, extremely high probability. After we also create this new order block. Again, meets all the criteria again. Coming off of a previous PD array, leaving behind a fair value gap, extremely high probability. Now, you need to be careful. Why do you need to be careful right now? Now you need to be monitoring the 5-minute and the 15-minute, so the time frames above it again, because once we create certain fair value gaps right here, and we leave behind those confirmed order blocks right now, then what happens? The 1-minute order blocks are not in context anymore. So what do we need to do? We need to be aware of what the 5-minute and the 15-minute are doing. Because once we have this price action right here, and we have this order block, and we think, oh, high probability order block, perfect. High probability order block, nothing wrong with it. But what happens? It fails. Why does it fail? Let's look at this order block low right there. Is there a reason for price to come back below that low? Let's delete all the other price action right there to not confuse us. Is there a reason for price to come back below that 1-minute order block right there into a fair value gap that is on the 5-minute, on the 15-minute, an order block that is on the 5-minute and the 15-minute, or even the 1 hour in this area right there? Let's take a look. On the 5-minute, no, there's nothing. Let's look at the 15-minute then. On the 15-minute, oh, hold on. Let's remove this drawing on the 1-minute that we made. The 1-minute order block low is the low of a 15-minute fair value gap. Boom, mind exploding. Beautiful edits with explosions everywhere. So is there a reason for price to return back below that 1-minute order block that we saw? Yes. Why? Because it's just the low of a 15-minute fair value gap and that 15-minute order block right there. Does that mean that this 15-minute order block will hold? No. Why not? Because this order block low right there, there's a reason to return back to it. Because what did we see on the 1 hour? Because on the 1 hour right here, we just had this line. That is the 1-minute order block right there. This is low probability. And then we had this 15-minute order block line right there. That is also low probability. Why? Because we have this 1 hour fair value gap and we had this 1 hour order block that is sitting right there. So that is a low probability order block. And then once we reach into this 1 hour order block right there, so this 1 hour order block, and we can aim for new highs right there, then what can we do again? Inside that price action, if we have the 15-minute, the 5-minute, the 1-minute, etc. in context, then if we look at the price action, we can again go over the same cycle of those high probability order blocks right there. And we can go into the 5-minute. And we can even go into the 1-minute again. Your 1 hour order block right there. Remember, the weak, the low probability 1-minute order block right there. And then your strong, your high probability 1-minute order blocks right there. Right here. Your high probability 1-minute order blocks. And the lows are constantly holding right there. Isn't that beautiful? That is exactly what a high probability order block is, what the strongest order block is. Now, just to make you aware, this is the tip of the iceberg. This is how I structure all my content. Because again, if you can't explain it simply, you don't understand it well enough. If you haven't just yet, then please do sign up to the newsletter where I send out extra information as well, which I don't share anywhere else. take a look at the link in the description, ario.io. That is where you can sign up to the newsletter. And then if you combine this with watching the videos of the A to Z guide, then just know the videos that are going to be put out from now on in the future. I hate to say I told you so, but they are next level. So all we can do is, of course, take advantage of them and enjoy. All right, perfect. Thank you.